Hi, Clint Coons here with Anderson Business Advisors, and this is my second segment in using the Series LLC when it comes to investing. In fact, what I'm going to talk about now is how you would actually employ this for your real estate investing. Because there's a lot of information out there about using the Series LLC and about how great it is and how it'll operate. But what I've found is that many investors like the concept but are unsure how to execute the structure and actually put it to use when it comes to investing. Now, I've been working with these structures for quite a few years, and there are some challenges that you'll run into when you try to implement this structure. And so what I want to do for you right now is just walk you through how I would typically handle a situation where someone is using a Series LLC for real estate investing. So if you watch the first video, you know what a Series LLC is. I'm not going to go into that in detail, but I will show you this. We've got our parent company here. Here's our parent LLC right here. Now we have our individual series. Let's assume that you went out and you created 1, 2, and 3, all right, when you set these up. Now the first thing you have to understand is that when you're setting up these individual series, you have to come up with a name for them, all right? Many times what people will do is they'll adopt the name of the parent in the name of the series, such as this one might be, if this right here was Red Rock LLC, Series LLC. I always like to put that in the title whenever I file it. Let people know it's a Series LLC. You could call this one here Red Rock Series 1 LLC. Something like that. Something to refer back to. But you're free to come up with any name you want. There's no requirement typically that you actually use the parent LLC in the individual name of the series filing, or not the filing, but in the creation of these series. But it's just good practice to work it in somehow, some way. Or maybe you put on 732 series, a series of Red Rock Series LLC, something like that. Now, once these are set up, then you have your property that you're looking to transfer into that series. So I have now 3 homes that I own here. And of course, if you remember from the first video, the way I've set it up is that all of these entities are owned 100% by this parent LLC here. So they're all disregarded for tax purposes. There's only one owner. We don't have to file any tax returns for these independent series. And I've created a management company up here. This would be either an LLC or a corp. I'll just make it a corp for purposes of this video. So this is my management one. So on each of these each of these individual series agreements, it states that this corporation is the manager of that particular series. And then it'll also state that the sole member is the parent LLC. So now you need to deed the property into the LLC, because it's not going to do you any good to keep the property in your own name, because if anything happens, then you're considered to be the owner and you'll have full liability. So we have to get the property from your name into this series. Now, as you know from watching my other videos, when I've talked one of my discussed deeds, you always want to use a warranty deed. Never use a quitclaim deed to transfer title to real estate. So in order for me to transfer this into here, I will use a warranty deed and deed it from my name into this individual series. So if you're going to do that, what you'll do is you'll prepare a deed. And you'll deed it not into this name here. You're going to deed it actually into the name of the parent LLC. So in this case, it's Red Rock Series LLC. I will prepare my deed transferring it from Clint Coons to Red Rock Series LLC. And then at the bottom of the deed, under the legal description and all the other language, I'm going to put this parenthetical notation, putting the world on notice. And a parenthetical notation is basically you put it in parentheses that this property that is being deeded into this Series LLC is to be held independently by Red Rock Series 1 LLC. And so that tells anybody who pulls the deed and looks at it that we deeded it into here, but our intention is to hold it here. Now you're probably wondering, why are we doing it this way? Why don't we just transfer it directly into Red Rock Series 1? Well, it has to do with title, okay? Transferring this property into Red Rock Series 1, that is not an established LLC that title can look to the Secretary of State and find. They will see no Red Rock Series 1 LLC registered anywhere. So we need to put it into an entity that is recognized on some state database. Now, another option you do have is to have Red Rock Series 1 file for a DBA in the county where the property is located. That would work, and then you could transfer it into the DBA. But most people don't want to go through that hassle. So they will just put this in parens down at the bottom of the deed. Option number 2 to set this up, use a land trust. Transfer your property, deed it into a land trust here. All right, so that's an entity that you've created. You put it in the trust name, then you can transfer your trust into the series. Now that will solve this issue of the deed and where you're putting the parens notation down the bottom, remove any confusion. So that's another option you have. Use a land trust if you don't want to go directly in with the particular type of style I conveyed to you with the deed. Now, let's assume in this one here, now I have this property in the name of this. Maybe I used a land trust over here and another land trust over here. So I kind of did a mix of 2 different styles to fund my series LLC. Now what's key here though is that these LLCs, these series, or cells as some people like to refer to them, they don't have bank accounts. So now it comes down to operating it. To whom will your tenants pay? Where do the rental agreements run? This is why I told you to create this management company that will manage your series LLC, that will manage the independent series, because that management company is what is going to interact with the tenants. It's going to collect all of the rents. Now, all of the series statutes, the vast majority of them that talk about how these entities should be operated, they recognize, or the drafters recognize, that creating bank accounts for entities that aren't registered anywhere creates a problem. That is, a bank will not open up the account for Series 1 LLC unless you file a DBA, and we don't want to put a lot of burden on people. So what they did, or many legislatures did when they drafted these statutes, is specified that these series will be respected provided that some entity separately accounts for the income and the expenses associated with each series. Meaning this, I can collect all the income up here from these properties, and I can pay all the expenses for those properties out of that corporation. The one requirement that the statute imposes upon me is that I keep really good books. That's it. As long as I have really good books, then this structure, because it's a hybrid, will not be looked at as one common enterprise, where if something happens here, they would say, well, this is all one entity and we're going to hold them all together, and you're going to lose the protection of those individual series. So it's key that you have a management company. I don't like to use the parent. Keep that separate. It's the owner. Have a separate management company there that deals with the tenants, enters into the lease agreements with the tenants, collects all the rents, holds the deposits, pays the expenses, but then separately accounts for it with your books. So set up QuickBooks, Excel, whatever you want. Now, the money that's left over, your rental income, what do you do with that? Well, from there, you distribute it to the members. And this parent is the member of all of these companies. So the income then would be distributed down here. And since Clint, well, normally what I would tell you is even with a Series LLC, you shouldn't own it in your own name. I would have your Series LLC held by a separate limited liability company over here. I like to use Wyoming for this. If you looked at any of my other videos on my channel, I've talked extensively about privacy and the benefit of privacy. So what you would do is you're the member of this company here. This Wyoming would own this. This would own all of those. So the money would flow as follows: from Management Corp to LLC, from Management LLC to Holding LLC, and then as you need it, it comes out to you. So that type of structure gives you an extra buffer there from an asset protection standpoint. From outside creditors, it provides anonymity for all of this because Wyoming will mask who's involved. That's great. And more importantly, you have the asset protection for your cash. So you run this through in this manner, and as long as you're keeping tracks of the expenses and the income, that structure should be respected if anything happens to any one of those cells. So that's how you would run this type of structure. Now just think, if you had 70 properties in Houston, Texas, 70 LLCs, I get it, that can get expensive. But if you set up one series LLC with 70 separate series, well, you can see where the benefit's going to be here now. That you only have one filing fee, but you've allocated the properties to these individual series. So if something goes wrong, now you're protected. The other 69 properties aren't going to be subject to that one mold case that happened because of the flooding that occurred in Houston a while back, and you have that built-in asset protection. So that's how you operate a series LLC. It's not as straightforward as using a traditional approach with individual limited liability companies where they can deal with the tenants directly and collect the rents and put them into their bank account and then distribute it out to the members. Here, a little more bookkeeping requirement on you because we're not bringing the monies directly into this individual series ourselves, but at the end of the day, it could be a cost savings. Now, having said all of this, if you've watched the first two videos, you're going to watch the third video because there are some drawbacks to using this particular type of structure, and we'll cover it then. My name is Clint Coons with Anderson Business Advisors, and best of luck with your real estate investing.